Hey traders, Raghi here, and the first question I want to tackle is ones that I've received quite a few of. And by the way, if you have questions for me, and this includes requests, right? Feel free to email me at raghi@simplertrading.com and then just put your question. This is a really easy way to do it. Put your question in the email's subject line, okay? Questions, requests, what have you, okay? All right. So one of the questions that I did receive quite a bit, both in the rooms, both in the options room and in the futures room, and mostly via email, is, what about today's pullback with Facebook being one of the main symbols that we were watching within our stock indices? Facebook, and you'll see this play out in Google and Goog and also Twitter. When Facebook, sort of steps in it, let's face it, they do that a lot. Typically those moments are opportunities to buy Facebook. Whether good nor bad, it's just about the price action. It's just about what typically happens. And right now we're seeing, again, Facebook under fire for their decision to, approach advertising and so forth. And advertisers are fleeing, or at least that's the PR game that advertisers are playing. And look, we've seen this before. There's going to be that run, if you will, the fear that advertising is going to back out of Facebook. Gang, they're not going anywhere. They've got to do this. This is a PR game. And the only reason I say this with confidence is we've seen this before. Okay, so is today's move one that was significant in Facebook? This is a topic that we first brought up in the free video, and we're going to go into a lot more detail and tactics about how I want to position myself long going into Monday, Tuesday, because look, what did we deal with? What have we dealt with so far? So far, we've dealt with the bank stress test and the window dressing around that. And we knew that the end of month and the end of quarter was going to bring some, what it was is just distributions. Along with the distributions, there was suddenly this narrative, okay, that there was going to be a significant de-risking. What's de-risking? De-risking is we're going to see a shift away or out of stocks, right, equities, and into bonds. Right? That was sort of the de-risking, but it was talked about so very much by the brokerages. Gang, let's think about this for a moment. Who brought up the de-risking? Brokerages, didn't they? Why would they do that? I mean, are they here to help you? Are they here to help me? I'm not saying all of the people within, say, Goldman Sachs are awful, but why would they even say that? To what end? That's what I always ask myself. They have a business. Traders hold their cards close to their vest, right? I mean, we don't want to tip our hand. Why would they? To me, there's an agenda. What's the agenda? So if I can convince folks that the markets are going to dump, right? If I have unfettered access to CNBC to talk my book, we've seen this a number of times, haven't we? With all the hedgies crying the woes on CNBC, talking about horrific, nightmarish scenarios. And what do we know in the background? They're liquidating their puts into the weakness that they are creating, and then they're buying. Well, seeing how this has been the game that's being played, what's the agenda? Could it be to encourage people to dump their shares up now? That's going to be your outflows as we wind down the month, and then in July we start to see the inflows. People go back into the markets because after all, gang, this is still a Fed and Treasury created asset bubble. 1999. You don't jump off that train. You look for pullbacks even when they are a little scary looking because folks still believe in buy the dip. So bank stress tests create some window dressing. That's a little bit of selling. End of month, end of quarter. Gang, this is a monthly and quarterly tendency. Distributions. This is a regular expected thing. So you add to that, add a little bit of kerosene to that with this narrative de-risking, which the brokers started, right? The brokers started this question, this conversation probably two and a half weeks ago. And then of course, I think June 11, that Thursday sell-off, that June 11 Thursday sell-off probably still looms pretty, near to a lot of people's memories in terms of, well, the market is capable of doing this. So that's still out there. It's a recent memory. maybe this thing isn't quite gone yet. So as we are doing a very natural, I think today's weakness was probably a pretty natural part of what we could see at the end of the month. You might say, well, Raghi, are you shorting this on the day trades? I am not. I don't trust these moves to the downside. I think we're going to have them. I've been saying that quite a bit in the premium videos and in the chat room, but I don't want to engage the market to the short side. And that's fine. I don't have a problem with sitting on the sidelines, because on Mondays and Fridays, what it does is it allows me to start looking at the end of day charts like we're going to look at right now and ask myself, wow, which one of these, if any, panicked to the downside? S&P, NASDAQ, Dow, these were not panic moves to the downside, gang. And you might say, well, how do you know, Rog? A lot of people will arbitrarily look at a candle and just say, wow, that's a big candle. So look at the candle that preceded it. Look at the candle that preceded it. In terms of size, is it really that much bigger? I mean, this isn't anywhere near June 11 levels or even June 15, not even close, maybe half. Did we go anywhere new? That's another really important question to ask. Have we gone anywhere new? Do we go significantly above yesterday's high? Do we go significantly above yesterday's low? Hardly. So this was kind of a one step forward, one step back kind of move. We haven't gone anywhere new. We haven't crossed any significant thresholds. Not really. So then the other thing is, from top to bottom, what was the move? 89.5 points. What is 89.5 points to specifically the S&P? Knowing that Google and Facebook, which are heavily weighted within the S&P futures, sold off the way they did, is 89.5 points sort of blowing the lid off of our daily price movement range? Not even close. Well, I wouldn't say not even close. We didn't take out those highs. We're down in here. So did we move within our typical price movement range? That's the question. Absolutely. We moved within our typical price movement range. So how could that be considered panic? It was a sell-off, yes, but I don't find it to be an all-out panic. What about the NASDAQ? 300 points, right? It would have to be over 300 points for me to say this market panicked to the downside. I mean, especially with Facebook selling off the way that it did and the inordinate amount of weighting that Facebook has within the NAS. The NAS barely grazed the 21 exponential and had a whopping sell-off of 296 points. Again, within that expected price movement range. So are there pieces of this market that moved a little bit outside its norms? Like, for example, Apple would be a great stock to look at. It's unique in that, again, I'm not looking at just 9:30 to 4, gang. I'm looking at the daily candle, extended hours included, of Apple. All right, Apple's range was 12.3 points. So what would I consider that 12.3 points a lot? Again, let's look at a historical price movement range. Barely, gang. So Apple would have to be somewhere above 20 to 22 points to really get my attention as far as a panic-driven sell-off. And all we've done is basically we've sold off to the point of control, the single price level on this chart that has the most volume traded at it. We've sold off to the 13-period exponential propulsion dot, okay, which is the 8 and the 13 EMAs, the 8 crossing up the 13 and interacting with price in a particular way, lighting up those dots. We're at the 13 exponential and the point of control. We're not at the wave. We're not at the value area low. Heck, we're not even at the 21 exponential. Is this a shallow retracement? Yes. Have we broken the mean or even the positive 1V score? No. Is this a panic move? Not where it's landed. No major thresholds crossed. Not even in terms of its high to low range. So again, most of the market participants and most of the news that you're going to hear is going to sort of be measured from yesterday's high, the day before's high. And so when the market pulls back, realize that psychologically high buyers have zero tolerance for a pullback, because why? Where are they positioned from? Way the heck up here. I mean, if you were positioned from 366, you would not be happy to see the market at 352. And yet, if you do like we do in the room and you're waiting for 352 or 337 or even whatever it is you're waiting for, further lower after a retracement, then today's move, you're going to frankly say, is it's only an aggressive pullback. It's not enough. I want more. We might get more on Monday. I'd like to see more on Monday. I'd like to see what we saw mid-month, where June 11 was the big sell-off, Friday was a little bit more weakness, and then Monday was when we engaged the market. Monday, I'm going to be looking to see Monday and Tuesday. So what we had was a Thursday, Friday, Monday, or in the mid-month. We might have like a Friday, Monday, Tuesday type 3-day window of opportunity as we wind down June. So I'll be talking a lot more about the levels that I want to be buying from. And you'll notice they're not only going to be levels primarily in the NASDAQ on the daily, but also the heavily weighted sectors within the NASDAQ and the heavily weighted stocks within those sectors on the NASDAQ, XLK, XLY, even heck XLC. Now you might say, why did XLC take it on the chin so badly? XLY and XLK held their own. Like, what's up with XLC? Well, I'll show you. That's up with XLC. The number 1, the number 2, and the number 3 weighted names within the XLC had awful days. Those are your 3 most heavily weighted stocks within XLC. So you might say to yourself, you know what, Rob? I want to navigate around these narratives. I'm not really interested in having exposure to these until we figure out exactly how this is going to play out. No problem. See, this is how we can get much more tactical, and I'll do this with you more on Monday. This is absolutely futures trading, gang. 1,000%. This is smart futures trading. This is a futures trader like myself who says, look, if I'm trading the NASDAQ, I'm trading stocks, a group of stocks with some gorgeous leverage. That's what I'm doing. I'm a stock trader. And so if I'm a stock trader, I can look at the individual names within that index, the NASDAQ, which, by the way, is still a relative outperformer amongst the 4 major averages, Russell, Dow, S&P, and NAS. And I might say to myself, you know what? I can play a significant part of the NASDAQ by buying a pullback in the XLY. No Facebook or Google to be seen in the heavily weighted names. All right, what about XLK? Take a look. Look at what we are devoid of in the top weighted names. So rather than stepping into the NASDAQ, which I actually do not have a problem with, but rather than stepping into the NASDAQ, if I wanted to find relative outperformance, where I wanted to leave sort of the ball and chain behind of Google, Goog, and Facebook, I could crack open the NASDAQ. I could go to the individual double green stocks that are not in panic mode, that have not pushed the upper end of the respective daily price movement ranges, or I can go to the sectors where I don't have exposure to those names. This is what I mean about building a smart trading book. This is what I mean about being able to be a futures trader and still understand that I could trade options on these, benefit from the leverage, but this is still very much a futures first mindset. When you can do this, when you can do this kind of process, I'm telling you, gang, the entire marketplace is going to be your playground. And that is what I want for you. I don't care if I'm flowing in and out of Forex, futures, stocks, ETFs. Notice there's a connective thread if you know where to look. This is how we do it. I hope this helps, and I'll see you in the next update.